Tuesday, Tuesday, Tuesday. It's about that time of day again here, folks. It's Tuesday evening. It's March the 19th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. As always, it is great to be here with you guys and gals. You know, I help new traders find predictable, dependable, profitable opportunities using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best of the best opportunities we see setting up for tomorrow, Wednesday's trading session. And we're going to cover crude oil, S&P, Nasdaq, gold, and euro in tonight's video. Now, we get some big news on the schedule tomorrow. We'll get the FOMC report coming out tomorrow. So we've got some work to do here to make sure we're ready ahead of tomorrow afternoon's news. I'm going to jump in here on oil first here tonight because, as you can see, the oil market spent most of the day today running lower and then into a trading range. The bias is bearish. Into a trading range, I want to sell up above the top of that range. So I'm looking for a couple sell patterns here to sell back down into that trading range tomorrow. But I gotta be honest, if you look a little bit further back here, it's not very difficult to see this oil is quite a bull market overall. And every time this market pulls back right now, buyers seem to be waiting. Will this be another example of that? Well, I have a plan for that as well. First of all, if we can get this market down below that trading range, I've got a couple great buying patterns I'm watching off the low of that range. And of course, I'm looking to sell up above the high of that range, but there's a couple different patterns and a couple big clues I'm looking for to tell us if this market's going to rally higher. I'm going to dig into that crude oil market and all the others here in just a moment. Over on the S&P here tonight, the S&P is bearish right now, but I got to be honest, just like oil, right? Just like oil, long-term trend is one hell of a bull market right now, right? Quite the bullish momentum overall. So even though we do have a bearishness overall in the market, I can't help but notice that we spent most of our day today, right, chopping around inside of that trading range. Anytime we spend a lot of time inside of a trading range, I know the odds are pretty good we're going to end up back into that range at some point, and that might be right what the buyer's looking for here going along with that long-term trend. So I've got a short-term bear momentum, right? We're bearish in the short term. I'm looking for a two-legged pullback right now. I'm looking for a two-legged pullback to sell this thing back down to retest that low because I got that triple measured move waiting down there at 28.22. But I'd be lying to you if I said I wasn't looking for a possible reversal here. And if we do get that reversal, I've got a couple key patterns to keep you on the right side of that market so you're not chasing after it as it goes higher. We're going to cover both sides, both buys and sells on the S&P here tonight. Then, of course, over on the Nasdaq right now, Nasdaq might just be the easier chart to kind of tell you what the S&P might be looking at tomorrow. Nasdaq, of course, went bullish into a trading range today. The buyers, you'll notice, tried to kick it out to the top. They failed and came tumbling all the way back down to that pendulum swing. And so, of course, we know that pendulum swing now being completed now gives the green light for those buyers now to go right back up into that trading range. So I'm looking to be a buyer here right now, but I've got two main problems. One is this extreme bearish momentum. I do have this listed as a bear market right now because you've got such a strong two-legged move down. You have to expect there are going to be some sellers on here trying to spoil our party going back to the upside. The other problem I have is the top of that range. So if we go higher here, I've really got to be concerned about sellers trying to come in and sell, and I've got to be concerned about buying into that level of resistance. So what's the plan here? I've got a great plan to get us long, basically resolving both of those problems, and I'm going to take a look at that in a moment here on the Nasdaq. So if you're a Nasdaq trader, make sure you stay tuned for the best entries and exits for tomorrow's trading session. And then, of course, over on the gold tonight, gold is quite obviously a bull market right now. We got two, right, big legs higher here right now. In fact, you could call it 1, 2, 3 legs up to that larger measured move. We're bullish. bullish. I definitely want to be a buyer right now. We've got a nice hidden channel I found here on that chart. The big problem though is I've got that trend line coming right down. That tells me I'm looking for a couple different setups here. I've got two specific buy patterns I'm looking for right now to make that next leg higher back up to retest that 1311. But I'm also watching closely here to see if we're going to get that tumble back down into that trading range that we talked about in last night's newsletter. If we do get that tumble back down, I think we might be able to take this, what is now a buy battle zone, I think we might be able to flip that and make it a sell zone for us as well. So we're going to use that battle zone on both sides of the coin here. I'm going to break that plan down here on gold here in just a few moments. And then of course we'll wrap up tonight on the mighty euro. The euro is bullish into a trading range. Not a lot new here, right? We've been talking about range-bound markets here all week this week. Well, it's only Tuesday, but you know we had a bunch of ranges last night on it. Got a bull market into a trading range. Bull market into a range tells me I want to be a buyer. I've got a handful of patterns I'm looking for to buy down below the low of that range. And of course, if we do go higher here, right, I'm looking for a very specific breakout above those highs. We're going to put both those together here, both buy and sell signals I'm looking for on that euro tomorrow. So we got you covered here. Got the euro, the gold, the Nasdaq, the S&P, and the oil. Before we jump in and put the whole plan together here for tomorrow's FOMC day, I want to make sure you never miss another great video. To make sure you never miss a newsletter video, just go right to our website here at sidewaysmarkets.com and give me your name, your email address, hit that subscribe now button, and join our mailing list. Now, I promise I'll never sell or give away your information, right? I'm only sending you the good stuff. No spam coming from my list, right? Only a friendly email every evening when our nightly newsletter goes live. So never miss another newsletter. In fact, never miss anything we publish here at School of Trade by making sure you join our mailing list. And then don't forget, when you hit that subscribe now button, make sure you check your inbox, because not only do I need you to verify your email, but I'm also going to send you a bunch of goodies in the inbox so you get the most out of our time together on this nightly newsletter. Now, speaking of newsletter, right? Speaking of getting the most out of our time together, tomorrow morning I'll be in our trade room with all of our clients at 8 o'clock Eastern time. I would love to have you there with me. If you can't be there with me tomorrow morning, the next best thing is to grab all the charts that I'll be using tomorrow in our trade room. You can download all of those charts. All of the links are right below the video tonight on the blog, and I'll put a link, of course, right in the description of that YouTube channel as well. So grab all those charts. If you can't be with me tomorrow in the trade room, that's the next best thing. And don't forget, while you're down there, while you're down below the video tonight, if you have any questions, comments, concerns, feedback, different videos you'd like to see me cover, that's what the comments section is for, guys and gals. So drop me a question in the comments section. Give me some feedback. I always want to make this newsletter better, and I'm always listening in the comments section. And while you're down there dropping me a comment, give me a thumbs up if you like the video tonight, and make sure you hit that subscribe now button and hit that bell icon so you can always get notified every time we publish something on our YouTube channel. And don't forget, if you have any questions here, don't be afraid to pick up that phone and call the office or use that live support tool if you don't want to use a telephone. I'm always here to answer your questions. I've been teaching and trading in this business for, almost 15 years now, over 10 years now here at School of Trade, and I've helped so many traders do this. I would love to answer the call, help answer all your questions, right? And for whatever, right? Whatever you need help with, or help you get started as a client. So don't forget, check that, right? Call that toll-free phone number, use that live support tool in the upper right-hand corner, and that way you get all the help you need, right? One-on-one. All right, let's jump right in. Enough chit-chat here, Joe. Let's get this party rolling here. Tomorrow's Wednesday, March the 20th. Tomorrow is not just your average day, though, right? We got a bunch of news tomorrow. First thing's coming out here is that petroleum status report at 10:30 Eastern time. Now remember, every Wednesday morning at 10:30, we get that weekly inventory report. My cutoff on Wednesdays is about 10 a.m. Eastern time when it comes to oil. Now I know, everybody thinks that petroleum status report, the weekly inventory report, There's money to be made, and there might be money to be made, but it's inconsistent. It's unreliable. The reality is the oil market is great. It's great to trade all week long, but once a week, Wednesday mornings at 10:30, you got to be careful. It's a big news report that comes out, the weekly inventory report. And again, although I know it's fun to gamble out there, right? We're not in the business of gambling here. We're looking for highly reliable opportunities. And we're not going to get those after 10 o'clock on Wednesday. Remember, that's only for oil, though, right? Only for you oil traders out there. 10 o'clock on Wednesday morning. At the very latest, 10:15, right, will be as far as I would go into that, because then, of course, at 10:30, you get that news that comes out. And usually the market after that news comes out is pretty darn unreliable as well, because it's a different type of market. It's a gambler's market after that 10:30 news comes out. So get to it early if you're trading oil out there tomorrow. And don't forget, we'll be trading oil tomorrow in the trade room at 8 o'clock Eastern time. Now, the big news, of course, is coming at 2 o'clock tomorrow afternoon, right? The FOMC meeting announcement will be made at 2 o'clock Eastern time. I don't think anybody is expecting to have that much of a surprise tomorrow from that meeting announcement. Where most of kind of the shock and awe will come from is from the press conference at 2:30 Eastern time. It's a lot like the ECB announcement that we see also, right? Where they'll make the announcement, and then a half an hour later, right, all the politicians, or in this case, all the unelected representatives, right, that make up the Fed, right, will of course then tell us what they were thinking and why they did that. That's usually where you get the most volatility, is just after that press conference gets started, when you're going to hear from, right, when you'll hear from our Fed chairman, right, Jerome Powell, and he'll kind of fill in some of the gaps that weren't there in that announcement. The bottom line, though, is whenever I have an FOMC day, I always know the morning session is the key, right? Get to it early, make your money early, and get out of there for lunch. What you've got to think about tomorrow morning is that morning session is going to come to a close early, because traders are going to want to get to lunch and come back early so they can get prepped up before that meeting announcement. Now, I'm not somebody who likes to trade during news. I'm not a news style trader. I'm a pattern trader. I'm looking for highly reliable opportunities. So you're not going to find many reliable trades, plenty of gamble trades after 2 o'clock tomorrow afternoon. If you want my opinion, if you're a new trader out there or you're not making consistent profit, stay away from these big news events. Make your money with us tomorrow in the trade room before 11:15, 11:30 Eastern time, when the U.S. morning session comes to an end. So early in, early out tomorrow. Tomorrow morning will likely feel a little bit like a Friday, right? It'll feel a little bit lower volume. It'll be a little bit less. Usually it is, right? But ahead of that FOMC announcement, because a lot of people don't want to make any big commitments before that news comes out. We'll be tomorrow morning in the trade room, 8 o'clock Eastern time. We're going to find our best setups before the afternoon session, right? That way we can avoid trading altogether during that FOMC announcement. And again, right, I know there'll be plenty of opportunities to gamble out there tomorrow afternoon, right? But my personal opinion is stick to what makes you money. Stick to those reliable setups that we find together every morning as part of our 3-step strategy. Now, speaking of reliable setups, let's jump in here. So now that we know the plan for FOMC tomorrow, right? Get at it early. Don't be surprised if that lunchtime session comes in a little bit earlier than normal. Now that we know the plan for getting at it early tomorrow, let's talk about oil. We've got oil, S&P, Nasdaq, gold, and of course we'll wrap things up here on that mighty euro. First things first, right? What type of market conditions are we dealing with right now? Is it a range-bound market or is it a trending market? It's a range-bound market. It's pretty easy to see. We went lower, pulled back, went lower, right, up, went through, came back, and that, of course, is your range. You could also go as far as saying it's a triangle, right? I wouldn't argue with that either. It's a bear market, right, into a triangle here. Whatever you want to call it, whether you want to call it a range or a triangle, it is a range-bound market with a bear bias. I'm going to go off of the major range here. I think that triangle could possibly be here, but I'm looking more at this as a range. Anytime I have a trading range with a bear bias to it, right, bear market into it, that basically tells me, Well, anytime I have a range at all, I always want to buy low and sell high. With that bear bias to it though, I want to try to sell high as best I can. So my goal is to get this market up above the top of that range and sell it back down. Now at the same time here, if we go lower here, I can also now look to be a buyer on this. I talked about this earlier. I think if we do try to go lower here, we got news tomorrow at 10:30, so obviously take everything with a grain of salt, before that news comes out, right? This may also be just one deep pullback, right? I mean, this could be one big channel here, and this could be a deep pullback here too. So I'm definitely looking for a buy side if we go lower. I'm looking for a sell side if we go higher. And I'm going to keep my eyes open here also in case we do end up ripping this thing higher here, right, as we go higher here. So let's put this plan together here. We get a bear bias into our trading range. With that trading range, I want to sell above that high. The best patterns on a range-bound market are going to look like the letter M in a trading range environment. Bear market, look for the letter M. We go up once, we pull back, we try again, and we look for the run back down, right? It kind of looks like that letter M, right? Look for that letter M, right? We look for that letter M as we go back in, right? So looking for those buyers to go up. Let those buyers now try to buy a pullback. What happens is we'll see that strong move higher. That moving average will come over. We'll look for those buyers now to try to buy that pullback. And once they try to buy that pullback, we now know exactly where their stops are, and I can look to sell right into their stops. Now, if we get lucky on this, the moving average will come over, and we can sell off that moving average for a pullback setup. We call these failure patterns. We go up one try, right? Buyers try once. Buyers try to buy the pullback off the moving average, and of course, we're looking to sell right into those stops. At the same time, I don't want to chase the market lower because I know I have the low of that range right there, and that's major support. So instead of chasing it lower, I'll wait for the pullback and we'll sell the pullback, right? So relatively easy idea there. I want to see these buyers try to go higher. I want to see these buyers try to buy the pullback. When they fail, I can then look for that failure. That failure then oftentimes turns into a pullback, and I can look for that run, again, going back down right into that trading range. Now, another pattern to watch for here as well is if we go lower, right? If we end up going lower here, how can I be a buyer, right? I already know here, right, how I want to sell this thing up around these highs. How can I be a buyer off these lows? What if we go lower? Then what can I do? Well, it's a bear bias, so I don't want to get too aggressive being a buyer. So what I'll do is I'll look for what we call a nested failure. It's going to be a 1, a 2, and a move back up. The bottom line is because we're bearish with that strong move lower, and again, because I talked about how I think there's the low of a big channel down here, I'm looking for a buying opportunity here going back into that range, but I want to make sure I give those sellers 1 try and 2 tries before I go buying now right into those stop losses of the sellers. So we've talked about the sell side. We talk about the buy side. What if the market, how do we buy up here? What if the market jumps higher here? What would that look like? Great question. We need to see the breakout pattern. And the breakout pattern that I like to use involves the same 2 try. Now remember, we got a bear market here. So as we go higher, I expect to see sellers trying to sell it. I would expect if they fail the first time, they're going to try again. And if we see them try once and twice and fail, bingo. Now we're buying right into those stops because those stops will be sitting right above those highs. So look for a nice strong push higher. Let those sellers try to sell once. They're probably not going to give up after once. They'll probably try again at a higher price. Once we have that 2 try from the sellers, then we look for the proper signal candle and we're buying right into those highs. So a pretty easy job here. Again, just remember, tomorrow morning is inventory day. We get that news at 10:30, so get to that oil market early. We're going 1, 2, failure into pullback, back down we go. We're going strong move down, 1, 2, nested failure, going back higher. Or we're going big blast higher, 1 try, 2 try, and we're buying back up from there. Right? Lots of different types of patterns. failure patterns, nested patterns, breakout patterns. In fact, I've got a great free course in our members section that'll teach you all about all my favorite patterns. In fact, that free course will teach you all about my entire 3-step trading strategy that we use every morning in our trade room. So if you want to learn more about all my favorite entry patterns, as well as all of these same strategy rules we use every morning in our trade room, I'll also send you hundreds of examples of real patterns we see every morning, right, 8 o'clock Eastern time. Grab that free course in the upper right-hand corner. You will not be disappointed. Everybody loves that free course. I'll also put a big red button right below that video tonight on our blog. Hit that big red button, grab that link in the upper right-hand corner, and I'll see you on the inside of our members section on the website here at schooloftrade.com as part of that free trading course. All right, oil is looking good here. How about some S&P? So S&P is a little bit tricky here right now. You'll notice here, of course, we went straight up here this morning into a trading range, and we pretty much spent most of the morning until about 2 o'clock this afternoon before this thing finally, right, broke out of that range. Now, with that big move down, we definitely know we have some bearish momentum. And remember, guys, anytime we see a strong move in one direction, we almost always see a second leg. Now, that tells me the bears have control. I do want to be a seller on this, but I mentioned two things in the introduction. One is it's very common for a market to leave the range and get sucked like a vacuum right back up into that trading range. So that is definitely on my radar right now. And it doesn't take a very experienced technician right now to see that this is very much a bull market. And this could easily just be a big pullback to allow those buyers to buy nice and low. The problem is, before I start buying this market right now, I've got to be careful of this momentum, right? And that leads me right into that same sequence of patterns that we talked about on the oil, right? Let's break this thing down. We got a bear momentum as we go lower. What's happening right now, right? I want to sell at resistance. I got a trend line coming down. That gives me a great spot now to sell at resistance, the top of that channel. I also have this trend line coming up. This trend line gives me that two-legged pullback pattern that we talk about quite a bit in the newsletter. Okay, so let's put those together here. Let's take the failure pattern. We go up above the moving average. The buyers are trying to buy that pullback. Now we know where their stops are, and I can look to sell right into those stops, grab the pullback, and down we go from there, right? So think about it that way, right? Now, there's two patterns we've already talked about here. The first one, of course, is that failure. We go up, 1, 2, the buyers try to buy the pullback, and we're waiting here now to sell right into their failure. From there, what happens is we stay patient and we wait for the pullback. You can add to your position, or if you get stopped out at the point of entry, right, add a new position on. The bottom line is that's a failure into a pullback combination, right? Those are two of my favorite patterns setting up for the sell side, right, going lower. Another thing, though, to keep in mind is that trend line coming up. If I draw that trend line, we call these what? Two-legged pullbacks. How do you trade two-legged pullbacks? You get underneath it and go. So with the right signal candle now, right, strong red candle, close below the moving average, right, good signal candle on this, and we'll go over all the rules in that free course, right, that I mentioned earlier on, right, grab that free course up there, right, that is a great potential for another pattern called the two-legged pullback, right, or the 2LP. You'll learn more about that in that free course. And of course, we'll go over this more tomorrow in the trade room. So that's another option there, right, as the market kind of pulls back. But what if the market keeps going, right? What if it keeps going? What if it keeps rolling higher? Then what do we do? Well, at that point now we look for, let me get rid of this here real quickly here. If we do end up running higher here now, I'm looking for a very simple pattern, a 1, a 2. I'd love to see that trap and go from there. Let those bears try once, let those bears try twice, and we'll buy right into those stop losses. At the very least, you could look for the 1, 2, and go. what I really like to see on this, just because it's such a big move down, if we do run higher, it's a 1, it's a 2, it's a trap, and it's a go. Now, sometimes these get really, really aggressive. Sometimes when these things reverse, they really run, and they really run hard. If that's the case now, just wait patiently for those traps. Right? Trap patterns are always going to be great when the market runs without me and I don't want to buy high, right? We call those trap patterns. And again, you'll learn all about these entry patterns I'm talking about inside that free course that I mentioned earlier. So really right now on the S&P, I'm looking for a sell, but it won't take a lot of convincing here for me to flip this to be a buy side here. Again, I want to see a 1, a 2, a failure into a pullback and down, right? 2 easy ways to sell that market going lower. Target, of course, is down at that measured move. Or we use that trend line up and over and back down. That's a great setup we're watching for here as well. And again, you can combine that, right? Combine it with the failure. Combine it with the pullback. There's no reason why you can't go 1, 2, and 3 patterns there. And again, you'll learn more about those inside the free trading course. So now we know more about how we want to be a seller on this, right? How about being a buyer right now? How we buy this? Go up, right? 1, 2, bingo. I want that trap low. I really want that trap low here because I don't want to chase the market higher. The most aggressive way to do it would be is we go up 1, 2, and you're buying high. If we really run though, I really want to look for that trap. Right? Get that trap. And a lot of times there'll be a new channel on here, right, that you can use right in combination at the low of that channel. All right, guys? So now we got a good idea how to sell this market. We get a good idea of how to buy this market. Tomorrow's the FOMC day, though. Let's not forget, this thing might go sideways, right? It might. It definitely might. We might end up sitting here sideways here. And if we end up sitting here sideways, what do? Failure patterns, right? 1 try, 2 try, back in. 1 try, 2 try, back in. If we get stuck in the mud tomorrow, right, inside of a range, we know that ranges are notorious for failed breakouts. So if we end up going sideways here inside of a range tomorrow, fade the breakouts. 1 try, 2 try, fade the breakout back in. 1 try, 2 try, fade it back in. Let those buyers try to buy the breakout. Again, this is if we end up going sideways, right? Very different if we run, right? We run, you're buying that trap. But if we just sit right here and go sideways, you know what I mean, right? Tomorrow morning we come in, it looks gross. 1, 2, back up. 1, 2, back down. And again, right? Tie everything down that's not attached because you get the FOMC hurricane coming right tomorrow afternoon at 2 o'clock Eastern time. Nasdaq, let's keep this rolling. We got the S&P looking good. Crude's looking good. S&P's all ready to rock. How about some Nasdaq right now? Now, in my opinion, the Nasdaq really helps to kind of maybe give a little bit of a forward guidance to what the S&P is telling us right now. The S&P wasn't really that easy. It looks very bearish. This Nasdaq looks all range right now, right? The S&P looks like a bear market right now. The Nasdaq looks like a range-bound market. We run up, big bull market into that trading range. Now, what do we do with these ranges? We buy low, we sell high. What happened? The bears, the bulls tried to make that run higher. What happened? They got clobbered all the way back down in. Strong move in one direction usually means a strong second leg. Strong second leg. We got the second leg. What is so crazy though is the amount of the move above the range is the amount of the move below the range, literally to the tick. Like to the tick. Incredible. One of the awesome things about ranges is that ranges give you easy to use levels of support and resistance. Not only can I take the size of the range, copy and paste that up to find resistance, copy and paste it down to find support, but I can use the amount of the move above the range, below the range, and isn't that insane, right? How accurate those pendulum swings are. So once we know we have that pendulum swing hit, Now I'm starting to feel like I want to be a buyer now, going back up into that range as this momentum now should shift back higher. But as I mentioned earlier, though, there are two big problems. One, this strong move down. Anytime we see a strong move in one direction, we almost always see a second leg. So strong move down, that tells me the odds are pretty good. By the time we get back to the top of this channel, we're going to probably see some sellers beating their chests and trying to run us out of this move. So we've got to respect those sellers. At the same time, if we see the market jump higher here, I still have to worry about buying into the high of that range because look, right, not a good place to be buying up there. So we've got some problems here. I want to be a buyer on this because we're below the low of that range, but I have to be aware, right, of these sellers. So what's an option here for me right now? Well, let's talk about the first one. The first one is I'm expecting to see some sellers try to sell this thing. The other concern is I want to make sure I don't buy into that level of resistance. Now, guys, let's see who watches this newsletter every evening. What's the best entry pattern if you're concerned about buying too high? Traps. Now, where could I find a trap? Well, I can find a trap below a prior swing. Now, wait a second. We're already anticipating that sellers are going to try to come in and sell off that trend line, aren't we? So this sets up for a great opportunity. We get a beautiful potential now for a trap low using those sellers, right, as fuel. I'm expecting you're going to see sellers trying to sell up here. And if I can get a nice trap low on this, boy, does that solve both problems. Nothing like killing two birds with one stone, although I would never encourage anybody to do that in real life. It is fitting for this, right? That metaphor really works. Okay? At this point now, I've got bears trying once, bears trying twice. They're probably not going to try a third time before they give up. This, of course, now gets me in buying nice and low, so I'm not buying into those highs, right? These are avoiding those easy losses, right? If you want an easy way to avoid losses, make sure you've got a good amount of reward for the amount of risk, right? If I try buying up here, I'm buying right into resistance. If I can buy way down here now we're talking, right? Now I can dramatically increase my winning ratios. So easy way to avoid loss there is again, because we got that strong move down, expect those sellers to keep trying. I hope they do. And then we can buy that trap low. Now, that's the easy way to be the buyer here right now. If we make ourselves back into that range, right? If we end up back into that range, the minute we hit that high of that range now, we now have to worry about getting back below it. One try, two try, back up in. Okay, we'll look for those bears to try once, twice, and we'll buy back into that range. So failure pattern if we do go back into the range. Now, what if the market takes off to the upside? What do we do then? Well, we don't want to do what they did earlier, right? That's not going to work. There are two basic patterns we look for as we go higher. One is the breakout. If this thing starts ripping higher here, right? If we start really ripping higher here, I want to see the 1, I want to see the 2, and the break higher. Okay, so again, we've got to see a very strong move higher here, right? Got to be a very strong move higher here. The breakout move is the 1, right? 1 seller, 2 seller, again, higher high, right? If they would have got that up there, the different story up top of the highs earlier, right? We go up, bears try once, bears try twice. We then buy into their stops. What's going to happen is as we go higher, you're going to see sellers are going to try to sell that high of the range. They'll try it again. They're not going to give up after one try, most likely, right? If sellers are there, we'll see it 1, 2, and we can buy right into their failure. It's an easy setup. But again, it all starts with strength. Now, what happens a lot of times is we'll see the market go into a range, and then we'll try to poke its head higher here. That's not the same thing. Okay, I'm talking about if we roll, right? We roll like what range? Like range? I don't see a range like that type of strength. If we get that much strength, 1, 2, buy that stop, right? Again, 1, 2, higher high. 1, 2, buying into those stops. Strong move up, 1, 2, buy those stops. Okay, you're literally buying into the exits of those sellers. But if we get stuck inside this range a little bit, or if we kind of go, choppy going higher here. No. Be very careful with those, right? So if we do end up chopping around here, we go up. How do I sell this market? Well, remember, the market's overall bullish. So because we're overall bullish, I want to look for that same type of pattern we talked about on the S&P. It was that nested failure, that 1, that 2, and the back down from there. Let those buyers try once, let them try twice, and we'll sell now right into those stop losses. So wait a second. If you saw that correctly, right? Oh, sorry about that. One more time. If we go inside the range, because we are bullish, I can be relatively aggressive. 1 try, 2 try, buying back in, right? Because we're bullish coming off that low, 1 try, 2 try, buy back in. However, right, if we're bullish and we go higher, being a seller requires 1 more, right? 1 more, because those buyers, they'll try once, maybe at the 38.2, they'll try again, maybe at the 50%, and then they'll all bail on it. So when you're going against that momentum, you got to look for a little bit more detail, right? You got to know what direction the market's momentum in. It might be the most important rule, because if you know what direction the market's momentum is, that tells you which types of levels to look for, support or resistance, and it tells you which types of patterns to look for. Going with the trend, the pattern can be a lot more aggressive than going against the market's momentum. Okay, we'll dig into a lot more of that in that free trading class. And of course, we'll hash it all out tomorrow morning at 8 o'clock Eastern time. But it really is the most important rule we follow is what direction is the market's momentum going, right? Because that's going to tell me where to look, what to look for, and how aggressive or how conservative I need to be. All right, let's keep going. We got 2 more charts here right now, gold and euro. Starting off here on the gold right now, gold is bullish. Nice strong bullish momentum going higher here, right? Nice bull market rolling higher here. Anytime I see a bull market and anytime I see a good trending environment, right, I look for a channel. I find that channel. I call these hidden channels. I mark up those 2 highs. I use that down at that low, and you can see it fits like a glove. Right now, there may also be a different channel in here. I would imagine there's probably also a channel that you might have drawn in, right, on something like that as well, right? That channel is also correct, but it doesn't exactly fit this particular scenario, but it is correct though, right, if you did use that variation of that channel. So now here we are, we're at the low of that channel. I want to buy in a bull market. I want to buy at the low of a bull channel. It's one of the great places to buy in a trending environment, at the low of a bull channel. But we got one problem. We've got a trend line coming down, right? We call these what? We call these 2-legged pullbacks. 1 leg, up, 2 legs. Now, what's the best pattern to use with this? The best pattern is up, over, and go. Now, what is interesting about this pattern is it also in this example will require these sellers to try once, try twice, which is always a great idea anyways, right? The bears are trying to sell very low here. Give them a chance to do it again, and if they fail again, we look to buy back up. So my first instinct is, I know we're bullish here right now. It's very easy to see we're bullish. I mark up in that bullish trend my bull channel. I want to buy the low of that channel. But again, it's easy to see that trend line coming down. One of the things we always look for at the low of a bull channel is a falling resistance trend line. And you'll notice I'm not drawing that trend line off the wicks. I'm going for the most number of touches. 1, 2, 3, 4, 5, right? If I draw it a little bit higher, I only get about 3 or 4 touches. If I draw it steeper here, it fits much better. When it comes to drawing trend lines, the key is whatever fits the best. And I know that seems it's a lot easier said than done, right? There's no real black and white rule for it, but I'm always teaching how to find that best fit every morning in our trade room. The bottom line is once you get the best fit for it, now we know we've got that classic now, move down, pull up, and go for a buy going higher. What this will do is this will give the buyers a chance to buy low. It will also rope in the sellers who are trying to sell back into that trading range. It'll rope them in, and allow us now to buy right into those stops. So it really is a great 1-2 punch right inside that battle zone. But speaking of trading range though, what if we do end up back in that range? What's the plan then? This range is it's no spring chicken, let's put it that way, right? This range has been around for quite some time now, as you can see, right? Going back to the end of last week. So we know the odds are pretty good here, right? We run up, the odds are pretty good. We'll end up back into that range, right? At this point though, because the market is bullish, I need to look for the buy side here first. But how could we sell this market? First of all, what would it look like, right, for us to want to sell this thing? Well, I know for a fact that as we go lower, we're going to probably see these buyers try to buy this pullback, right? If you were to look at this right now, right, deepest part of the move, yeah, I would imagine there's probably going to be some 50% buyers here, right? Some 382 buyers down here, right? I would imagine if it was me 10 years ago, right, I'd be buying a pullback down here. I wouldn't care about the range, right? I'd say, oh, we're pulling back halfway. Bottom line is, guys, I would imagine you've got a lot of buyers who are looking at this going, oh, it's a 38.2 pullback. Oh, it's a 50% pullback. Oh, it's a golden ratio pullback. Whatever ratios they want to use. Again, we already talked about why we don't trust those levels in last night's newsletter. The bottom line, though, is if we do see those buyers coming in, I'm going to want to see them try once, try twice, and then trap. Now, why is a trap pattern so important up here? A trap is important up here because I don't want to sell too low. As we go lower here, it's going to be really convincing to want to chase after that market. But the one thing you don't want to do when the market reverses is jump in, because then you're selling all the way down at those lows. Now, why is it so bad? Well, because the reason why the market will dump is because the buyers are getting out. Not because sellers are swarming this market. It's very important to understand that. The sellers are not the ones that are going to sell this thing back down to that range. It's the buyers who are going to be the ones that provide the fuel, right? They're getting out of their long positions. Once those buyers get out, this price will oftentimes sit down here. Because remember, the sellers are not selling this. It's the buyers selling it that makes it chop down. The sellers are waiting up here, and I want to wait to sell with them. So when a market reverses, it's very easy to chase after it. But again, when you chase after a market that reverses, what happens? You end up getting a horrible fill. And as soon as those buyers stop getting out, and they will, now that market now is going to sit there. The sellers don't want to sell low, so what do? They wait to sell it high. And that's exactly what we're trying to do here. So again, look for the move lower. Let those buyers try once. Let them try twice, right? Look for the 1. Look for the 2. You'll see it. It'll be obvious. And once you see that 1, 2, then we know, get me up, right? Somewhere in that area of resistance, and then I can sell it back down. That's where all the sellers are waiting up here, right? They're not waiting down here. Let the market collapse back down. Don't take the bait. Let the buyers try to buy it once. They buy the 382. Buy it again at the halfway point, right? These are all the buyers who are trying to buy that pullback, right? They're trying to buy that pullback. Okay? And they might be successful. So how do we profit off that if they're successful, right? What if this thing does? What if it jackknifes lower and then runs higher? What do we do then? You know, we already know we're going to go up and over and buy that. We already know if it runs lower, it's 1, 2, sell for a trap. Do not sell down inside that range. It's too small down there. No profit to make down there, right? You make your money when you get in at a better price. But what if this thing jumps, right? What if it runs lower? And what if we do get it running higher here? Then what? 1, 2, go. If we see this thing roll higher, right? If it literally jackknives something like this, right? If it jackknives down or right back up, 1, 2, go. And if it really runs up, trap. Right? If it really runs, then you don't want to buy high, you want to buy low, right? Remember, anytime I'm concerned about buying into resistance, what's the best pattern? Trap patterns. And again, don't forget, you'll learn more about two-legged pullbacks. You'll learn more about that 1, 2 trap. You'll learn more about trap breakouts in that free trading course. So just a couple scenarios that we're watching for right here tomorrow. And don't forget, if we end up all the way back into that range, 1, 2, buying back in again, right? If we end up back in that range, buy low, sell high. And one last thing about gold, don't forget, tomorrow is probably going to be one of the more difficult days to trade gold. Get to it early. As I mentioned earlier, tomorrow was FOMC day, right? Tomorrow's like a day living on a boat. Make sure everything is well secured, right? Make sure everything's bolted down. Make sure everything is put away. Make sure everything is cleaned up here. Be careful into lunchtime tomorrow. Things will slow down. And then, of course, Hurricane FOMC comes in right at 2 o'clock tomorrow afternoon. Careful on gold, though. Gold is notoriously difficult on Fed days. Next up here, last but not least here, over on the euro. Euro is a relatively easy chart here. Look at a bull market, right, into a trading range. The trading range tells me I want to buy low, I want to sell high. The momentum is bullish, which tells me I want to buy low. Okay, I want to buy potentially those highs. We'll see if we can get through it tomorrow. So really at this point, you're thinking, how can I buy below the range? And then, of course, if we go through it, how can I buy a breakout? Or even more important, right, what if we don't? What if we don't break out and we fail? Okay, what are those two potential, right, scenarios there? Now, it's also very important to remember that tomorrow's FOMC. FOMC will have an impact on gold, right, and very much so on this euro. If we can get a break higher here tomorrow, that 15,000 big round number, that's where these euro bulls are trying to run here, just so you know. Right? Euro's been all over these big round numbers lately. We're holding off of that 14,000 right now, trying to make that 15,000. Those are the big targets here we're looking for here on the euro as we go into the end of the week here. Most important thing, though, right now is we're bullish into that trading range. I want to buy, right, off those lows. It'll look just like this, right? 1 try, 2 try, failure back in, right? I want to see it pull back. 1 try, 2 try. Let those bears try once. Let them try to sell off that moving average, right? Find their stops. Buy into those stops. Then buy the pullback, right? 2 easy patterns. 2 very, very easy patterns there. And again, the moving average will look like that, right? It'll look very, very similar to what we saw earlier on, right, in the week. All right, guys? So again, failure pattern into pullback pattern. Or maybe it's a 2-legged pullback. 1, 2, draw that trend line down, get up and over it and use that, right? 2-legged pullback. That works. Or maybe we sit sideways here. What if we sit quietly here? What if this market sits quietly here and goes nowhere? Then what do we do? At that point, we wait for the 2 try. 1 try, 2 try, back up in. Use these key levels of support. Okay, even if we sit around and chop sideways. If we chop sideways here, what do we do? If we chop sideways here, what else can we do? What about price going higher here? If price goes higher, strong move up, 1 try, 2 try, back down in. Let those buyers try once to hold the pullback. Let them try twice. Remember, I'll get more aggressive with it because I'm going with the momentum. If I want to sell the high, I've got to be a little bit more conservative, right? I can't be so aggressive going against that momentum. What would a breakout look like? Strong move up. 1 try for the bears, 2 try for the bears, and up from there. 1, 2, go. All right, guys? Strong move up. Very strong move. I'm not talking about this, right? 1, 2. That's not it. Strong move up into that battle zone. 1, 2, buying into it. Where's our target if we do the breakout? 15,000, right? Where's our target if we go lower? Back to the high of that range. All right, guys? Now we know the plan here for that euro. Careful, 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 right? Tomorrow on that euro and the gold. E-minis shouldn't be that bad. Oil is that inventory day, right? Tomorrow's inventory on oil. So oil is really a tight time, right, tomorrow morning. And as always, don't forget, guys, we're going to get together like we do every morning tomorrow morning, 8 o'clock Eastern time. We're going to take all this information we talk about tonight, we're going to wrap it all together tomorrow and execute the plan together with all of our clients. I want to see you there with me, so get started this afternoon as a brand new member here at School of Trade. We've got 3 levels of membership. Our beginner classes will teach you all about setting up your computer, your office, your brokerage account, all the software, the indicators, all the fundamentals of getting your business started correctly is covered in that beginner course. Then you've got the intermediate classes. The intermediate classes between you and me are where most of the value is here, because that's where I teach all the technical analysis. And then in the advanced classes, this is where we take everything we've learned so far, we wrap it together with what I call my 3-step trading strategy to find the conditions, find the levels, and combine with the entry patterns. You'll get the whole entire strategy as part of that advanced class. So get started right there on the website. Grab those beginner, intermediate, and advanced classes here. Tomorrow morning we'll be with all of our advanced members in our trade room, 8 o'clock Eastern time. And don't forget, we've got one of the best free trials in the business. Grab that free trial for a copy of our free trading course, along with a free pass. Come out and join us as a guest in our trade room. And as always, if you have any questions, don't be a stranger. Call that toll-free phone number. Use that live support tool. Drop me a comment in the comment section below. And man, oh man, another great video under our belts. Tomorrow morning, it's going to come fast than we think it will. I'll see you tomorrow, 8 o'clock Eastern time. If not tomorrow morning, same time, same place tomorrow night, guys and gals. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.